Welcome everyone to How to Start a Startup. This session is pretty, I'm sure as you saw the title, pretty general. And we're going to be going over some basics on just mindset, resources, and I'll touch upon some legal and accounting basics to help folks here. Before we get started, quickly just who I am. I see a lot of familiar faces here, so I think I know a good number of you, but for those I don't, hi, my name is Jeff Peng. I'm the advisor with IBC. I've spent my last, 10, 12 years working in the innovation space, and a little over half of that working with early stage founders. So I'm hoping within this session to impart some knowledge and insights that I've gathered throughout my years of advising and mentoring teams. So quickly just going over the agenda and expectations. Pretty straightforward. We're going to cover several things. First, we'll start off with the founder's mindset. This is really just to get everyone in the right frame of mind so they know sort of what to be thinking about, what to be considering when you're looking at these resources and making the key decisions for your startup. And then we'll dive into incorporation, basic contracts, and intellectual property. And also getting started with accounting and some of the basics and some of the tools and resources. And finally, just a quick overview of everything. And at the end, we'll have some time for Q&A. We have around 2 hours scheduled for this session. I don't expect it to go for the whole 2 hours. However, I'm happy to stick around and answer any one-on-one questions or anything that isn't answered throughout the duration of the presentation. I will put a quick disclaimer though. All the information that's provided here is solely of my opinion or experience. It is highly recommended you consult with a professional on any legal or accounting issues. This presentation should not be constituted as legal or accounting advice. This is just my summed up experience. If you have any more pointed questions on any of the later topics, I suggest you reach out to one of our IBC mentors that cover some of those topics and speak to them. Okay, so let's start by just getting some best practices for you as a founder, get everyone in the right frame of mind before we sort of jump into the more technical topics. I think the first is get comfortable with uncertainty. This shouldn't be a surprise for anyone here. If it is, well, surprise, you have to get uncomfortable with uncertainty. As a founder, you're going to have a lot of unknowns, whether that is from a strategic market side, to developing and obtaining resources for your business. Things could change. Things might get more expensive, or other barriers or risks might come up. So you really need to get comfortable with the uncertain and the unknown. The second is understand the why behind your decisions. And I think this is a big one, especially as it pertains to things like incorporation or using specific tools or services, really for you folks to understand, why are you doing this? Why does this matter? Are you incorporating because you want to apply to a certain grant and it's required that you incorporate, or you need to do it for any specific legitimacy reasons or whatever it may be? What are the decisions you're doing? And why? What is the logic behind that? Because many times I'll have founders, they'll say, oh yeah, we want to incorporate. But why? You don't have any sales. You haven't even done customer discovery. It's going to be better use of your time to go validating out and proving your hypotheses than it is just jumping into incorporation if there's no reason behind it. So think about that one. And sort of this ties in with the previous slide. Align to your overall strategy and goals. So what are you trying to achieve? If, for example, you're doing customer validation and your goals is to, talk to, I'm making this up, 100 customers and get all that data to validate a customer need, do you need to go and spend $3,000 on legal fees? Or do you need to incorporate and have a board of directors? Or do you need to get that fancy $500 bookkeeping software or whatever it may be? And finally, do the research. I think right now, everyone here, you're in a very fortunate position. Not only, do you have the resources of IBC, but there's a huge ecosystem for founders and a lot of programs, services, and opportunities that are looking to, work with, recruit, or work for different startups and different ventures and all that sort of stuff. So based on that, really understand what's out there and figure out, does it go back to, does it align with the why, but more importantly, does it align with what your goals and objectives are? And does it make sense to use the limited resources that you have? Because I think everyone here probably is bootstrapping one way or another. Some of you might have gotten ESH funds, some might have gotten funds from friends and family or their savings, and you have a limited amount of resources. So you really need to understand what's out there, what's the best resource to use. I will go out here and say in this session, I will talk about some resources you can access, but I'm not going to go through the slate of them. Everyone here, I think, is capable of using Google and the internet and going through the resources to see what's out there. Oh, there's a question, eager to know who is on IBC could help me based on company that's starting another region, tax structures. Yeah, Adam, we just on your question for taxes, we've got a accounting firm there. Now they're a service provider, but they will do some free consultations, SRJ accountants. I don't recall exactly who is on the mentor database on deck for that now, but again, if you go on that database and just filter through for accounting, you'll get them and probably one or two other folks that can help you with that.
Yeah, thank you, Jeff. Do you mean like as for accounted, like maybe Chime on iBoost?
I'm sorry?
Like I went through the documentation you were mentioning and I found an accountant called Chime. Is that the person you mean, or shall I take another look?
Might want to take another look. Definitely we can talk about this more towards the end, but there should be someone on there under SRJ. I don't recall who is the individual.
Okay, we'll take a look. Thank you, Jeff.
So this bears repeating again. Quickly, just disclaimer, this is all my own opinions and advice. This is not legal or accounting advice. Please do talk to a professional. Take advantage of the mentors that we have on there and the service providers. Most of them, all of them, will do a quick, 30-minute, 1-hour session to answer all of your questions. Okay, so before I move into the first part for incorporation and the legal stuff, are there any questions? Okay, cool. Let's jump into incorporation, basic contracts, and intellectual property, the fun stuff. Okay, so why does this matter? Well, first off, come on, there we go. You need to understand what type of business you are and what rights you have. You can also take advantage of the opportunities that are available to you based on the type of business that you are and what you're trying to do. And you have clear controls and parameters of your business operations and relationships. So you understand how your business is structured. And also at the same time, if you have co-founders or other stakeholders, there's a clear understanding of what their relationship is, what the roles are, what are they doing, what are they getting, what does that look like? I think especially for those that are just starting right now, which I think a majority of you are, if you do have teams already, it's really, really critical, in my opinion, to define those relationships early on and to have that in some sort of agreement or paper. Okay, so let's get into a quick review of business structures. There's 3 types. The first one is sole proprietorship. This is one person carries on a business in their own name. A partnership, which is 2 or more persons or entities carrying on the business together. And then finally, the corporation, which is a separate legal entity created by statute. Now, I think for most folks on here, you're going to either fall into 1 or 2. Now, based on that, there's this chart here, which just goes through in more depth, sort of from a legal side. What does that look like for each of these different types of businesses? So for the owners, I mentioned that already. I'm not going to go into there. In terms of the process for getting that started, for both the sole proprietorship and partnership, you can register that. You can do that either federally or provincially. And for the corporation, you can incorporate that through the government. And that's a bit more of a process because you obviously need to have bylaws and there's more steps to just registering and getting, say, a number company. In terms of personal liability, for sole proprietorship, there's unlimited liability. So that's potentially, or not potentially, it is on you. Partnerships, there's joint and several different types of liabilities. So if you're in a partnership, similar to the sole proprietorship liability, does go for all bodies. And then finally, for the corporation, since it's a separate entity, there isn't any liability to those involved in the to those personally involved, but it's more so on the entity itself. In terms of the duration, the sole proprietorship is the life of a person, so that really is until you want to shut down. For the partnership, that duration is by contract, depending on the agreement that's set up, and then the corporation is perpetual. So that'll keep going until the corporation itself shuts down as an entity. In terms of profits and losses, for sole proprietorship, those are personal. For partnership, they're shared as agreed upon. So depending on what the agreement is for profit splitting and absorbing losses, that'll depend on whatever the partnership agreement is. And finally, for the corporations, the profit and losses are held by the corporation and profit is distributed as dividends. Now, for managing structure, for sole proprietor, there's no governing contract since it's just you. For a partnership, the governing contract is recommended. So it's really recommended you have some sort of shareholders agreement or documentation to show, what is the structure, who gets what shares, what does that look like? And then finally, for the corporation, the rules are set by statute and internal bylaws. So that'll show, do you have a board of directors? What does distribution of dividends and all of that look like? So that's a quick overview of the different types of business structures and sort of what each of them entail. This is pretty high level. If you're looking for any more specific questions, I would really recommend you reach out to one of the legal mentors we have in IBC. They'll be able to help you more on your specific situation. But I would suspect, again, most of you fall either in the sole proprietor or partnership. Any questions on business structure? All right, cool. So a lot of folks mentioned this. So the question is, should you incorporate? Well, first, let's look at some of the pros. You have liability protection. So if you incorporate, there's some protection from liability. You get potential for favorable tax treatment. For example, for government grants, not a lot, but a number of them require that you have been incorporated for X amount of years, or you are incorporated, for example, SHRED, which is the Science Research and Development Tax Credits. Those do require that you are incorporated. You could also potentially have a lower tax rate. Sometimes it adds legitimacy, and I put an asterisk on this one because I've seen a lot of teams when they first start out, they're like, oh, we've got to incorporate, make us legitimate, we're a real business. I would caution against that. Like if you're looking to go out for legitimacy, you don't always have to start with incorporation. There's other ways of doing that. And also your time, again, in my opinion, is best used verifying that this company should exist and the problem exists than jumping right into incorporation. And also you have the ability to add shareholders and enable income splitting. So there are some cons of incorporating. It can be potentially complex depending on how you want to structure the business, how many partners. It can be something pretty straightforward where you just sign up online, or you may have to do a lot more paperwork. And also, if you're at the stage now where you're unsure this is going to continue 12 months from now, you may want to hold off on incorporation. Also, there's the potential for high costs. So the basic fee for incorporating is around $200 to $250, but sometimes some folks may want to get a lawyer to do it, and that could be additional fees. That could be a few $1,000s. And there's a separation control from ownership. So what that means is you as the individual wouldn't be fully owning it. There is a separation. And finally, for incorporation, you can incorporate either federally or provincially. Something to consider is that if you do it federally, it applies to all of Canada, while as provincially, it's just that province. So I've gone through the pros and cons of incorporation, but Jeff, you haven't answered the question. should we incorporate or not? This isn't going to be the answer probably folks are looking for if you're looking for a blanket one, but it really depends on your situation. Based on the pros and cons, based on sort of where you are right now, do you feel that it's the right time to incorporate? If you are just starting and you're just talking to potential customers, I don't recommend it. However, if you have to get a grant, usually government grants or something like that, or a tax credit, and the only way that one of the requirements is a corporation, okay, it makes sense. But at the end of the day, going back to the mindset slides I was talking about, does this align with your goals and what you're trying to achieve? Does incorporation fit right now, or it doesn't? That's something you need to ask yourselves and see, does it fit your situation? Is the opportunity cost, the time and money and resources you're going to be putting in incorporation, is that worth it right now, or can those resources be used somewhere else that's more critical? Any questions on incorporation? Or anything that I've talked about? Okay, cool. So the next is the entrepreneur's key contracts. These are going to be some of the typical agreements that we usually see founders ask us about or have questions. You can find copies of these either on the IBC Wiki or through ClauseHound, which is a program as a Zone Learning member that you have access to for this platform. They've got a bunch of online templates that you can take a look on there if you're looking for some assistance and guidance on what paperwork to use. So the first one are non-disclosure agreements, NDAs. The second are employment contractor agreements. The next is volunteer agreements. And finally, the shareholders agreement. So let's jump into the first one, NDAs. So always before sharing anything confidential with investors, customers, and potential partners, it's recommended that you use this. Now, there are going to be some investors, and I speak from past of this, that they will refuse to sign an NDA. And the reason is they don't want to put themselves in a position where if they hear your pitch and they say, oh, I don't want to invest, and later on they hear another one that, you can come back and go, hey, Jeff, you heard my pitch and you stole my idea. It's like, well, no, I hear 100 pitches in a week or whatever it may be. It doesn't mean I stole the idea, just someone else had a similar idea, but their approach or whatever it may be was better. So you may encounter that, but generally for NDAs, if you're talking to anyone that's going to be more sensitive information about your venture, if you're getting the more technical things that aren't just surface level, you generally do want to get them to sign something like this. And it's useful to protect secrets, but necessary to protect an invention that might be patentable. Again, when I talk about the more technical aspects, these are things that could be patentable. What is the secret sauce to your technology? If you're going to disclose that to an individual, you don't want them to be blabbing about that. As I mentioned before, be aware that some parties will not sign NDAs, aka sophisticated investors. Mentioned that already. And there may be an obligation of confidentiality depending on the circumstances, even without a contract in writing. So an easy example of that is myself or anyone that's an IBC staff member. As an employee of Ryerson, we have employee agreements, we have confidentiality agreements. That is not just implied, it is part of the responsibility to respect the confidentiality of our founders. Okay. The next one are employment and contract agreements. Anyone who works for a startup is an employee, a contractor, or a volunteer, and different rights flow from that classification. I think generally for most of you folks, it's probably going to start with volunteer, and then depending on your resource situation, contractor and then employee, or vice versa. And you always need to have a written agreement to set the rules, or else they'll be imposed by statute or case law or implied by conduct. So, for anyone here, especially that is a control freak, which is perfectly fine, you want to be able to have those rules set out So not only do you understand them, but also the other party does. So there is no vagueness of, oh, I thought my responsibilities were only this. I didn't realize it was that also. Of course, and also technically startup is not responsible for tax withholding, WSIB reporting, or perks for a contractor. For a contractor and contractor may not be able to claim when an employee cannot. And then finally, issues to be addressed include payment for work, IP ownership, equity entitlement, CRA, and decision making. So these are the general items that you'll find in these contracts. Okay, so I want to talk quickly about contractor, because a lot of folks want to be contractors, but there are certain limitations. You are not a contractor if you don't manage your own work process, if you only have one customer, if you participate in any employee perks like benefits or equipment or whatever, if you don't use your own tool, speaking of equipment. So if you're working for a company and you're using their laptop in their space, and you're not using your own tools, not really a contractor, more of an employee. And if you don't remit your own taxes. So if you're doing contractor, you're remitting your taxes, remitting HST and all of that. One thing I'll mention on this, on the employee contractor side, is that don't mess around with this. The CRA is very serious and very surgical in audits. And if they find out that you have been reporting yourself as a contractor, but really you are an employee, both you and the employer will be flagged, and they keep that in their system. And I've had individuals I know that, they've been flagged, not for this, but for other things. And even for years following, they're always audited around tax time. So, be aware of that. Okay, what's happening here? There we go. Okay, so volunteer agreement. I think most folks are going to be doing this first. And this is an interesting solution because obviously it's useful to allow new people to help without a commitment from the startup. You don't have to give them equity, you don't have to pay them, and it can be time or task limited. And I was mentioning, don't need a grant or promise equity or payment. This does ensure confidentiality, so they can't blab about, if they worked on any technical aspect of your startup or venture. They've agreed legally that they're going to keep that confidential. It also may prevent future competition, and it captures any resulting IP that the volunteer develops. I'm a fan of having these, again, specifically about just talking what the parameters are, but I think one thing to consider, and this is more of a personal preference, is you don't have to pay volunteers, but I think it's always best practice, if you can, to provide some sort of stipend. I think in light of just recently too with volunteers, that it turns into the employers abusing their time, and they're basically doing a full-time job, but they're a volunteer. So when you folks are looking, or if you are utilizing volunteers, see what you can do to help them out, even if it's just a small stipend. At least it shows that there's some sort of incentive beyond just, oh, it's good for their resume, which, as true as that is, it may also save you some egg in the face later on. All right, so the shareholders agreement. I think this is a big one. If any of you have other team members or think of bringing them on, a shareholders agreement, I think, is one of the key things you should have, because this is a good document to establish sort of where everyone sits right now, and where everyone stands and has clarity. So this is a roadmap for running the company. It shows who's doing what are all the details, who makes the decisions, who's on the board, management, CEO, shareholders, who are the decision makers. If you have a team of, say, 4 co-founders right now, that's great at the start, that everyone's in this kumbaya phase of we should all have equal shares and whatnot. But unfortunately, reality is very different from the theoretical. And usually what you'll find is other folks will be doing a lot more, or one individual will end up being the decision maker, whoever is the CEO. So when you are developing out your shareholders agreement, that should be done based on, okay, who's doing what, how much share should be allocated. And that'll make it easier too when you have to make decisions. So who's going to be the directors and officers if you do need to put together a board? What rights do shareholders have? Can certain groups veto big decisions? And how are shares bought and sold? Again, right now for you folks, your shareholders agreement, I don't think it's going to be that intense. You probably won't need a board of directors at the very moment. But for those that do have, co-founders, you do want to have a shareholder agreements that at least covers what the roadmap is, who's making what decisions, who's getting what shares, what does it look like if someone exits, what are all those scenarios? Any questions about any of the contracts and agreements? Or any questions at all? Okay. So I'm just keep going through. So the next, I'm going to briefly talk about intellectual property. Generally, we have one of our advisors do a talk on IP that goes more into IP and patents. I'm not going to get into anything too in-depth, but I think it's worthwhile if folks here, you aren't familiar already with what IP is, why it's as important, it's good to at least have that, that overall knowledge. Oh, there's a question. Do we still have access to the templates of these agreements? Yes, you do. You can access them through the IBC wiki or through ClausHound. There's templates there. And if you aren't able to find anything specific, reach out to your assigned advisor and we'll be able to find that for you. Okay, so all IP is national, not internationally. It's generally the creation of legislation or common law. So what this basically means is IP exists as a shield to prevent others from stealing your IP. And most IP only applies to the country where you've filed it for. So if you file it in Canada, your IP is not going to protect you in Europe or Asia. And, using Asia as an example, let's say China, some places like that, their IP laws exist, but they may not always be the most strenuous ones. So it's something to consider when you're developing an IP. General legal form is a license. So you can think of this as renting out your IP for a specific purpose or vertical in a geography for a period of time, subject to performance reviews or requirements. So when you're putting out your IP, it's usually going to be a license and there is a finite amount of time and duration for it. I'll get into those lifespans later on. IP should be part of any employment, volunteer, or contractor's agreement. So any type of individual that is part of your venture, whether they're an employee, volunteer, or contractor agreement, there should be a section in there that deals with IP. So if I'm a contractor or a volunteer and I'm working for you and I'm programming out code or helping to build your prototype, you should state out that any IP that I develop as an employee goes toward that for the company goes towards the company. It's not mine to keep. True contractors, however, own the IP they develop unless otherwise agreed upon. So again, depending on the agreement, it could be, Ali hires me as a contractor to develop software. And, depending on the agreement, you might say, okay, Jeff, I'm hiring you, but whatever you develop, that's going to be ours. Cool. Or it could just be, I'm developing out, they're going to use, my services, but I'll retain the IP to, the code that I develop. Yet employers own the IP developed by employees if the invention is part of their job. Now, one thing I want to mention is IP derived from university resources. You need to understand the context. For example, if everyone's here is from Ryerson, Ryerson's inventor-owned. So any IP that you develop, as a student using Ryerson resources, it's yours. However, other institutions and universities have different IP policies. For example, an institution that I worked with in the past, their IP policy wasn't inventor-owned. it was stated that if you use any of their resources, they would have the ability to take part of the IP. So for example, if you use their lab or use their laptops or whatever, anything that's theirs, they potentially have a right to take a part of the IP that's developed. Now, I think the good news on this is for universities, most of them are moving towards more inventor-owned, but that isn't for everyone. So if you are unsure about what the policy is at your institution or you want clarity, my suggestion is reach out to the tech transfer office. They usually have some sort of individual that is in charge of IP, and they should be able to answer any specific questions you have around universities and IP and what does that policy look like. It's on the website also, but sometimes it can either be buried or it could be tricky. Okay, and finally, all IP created by legislation has a finite lifespan. So what that means is for the different types of IP, so patents, trademarks, copyright, trade secrets, all of those have a different amount of time, how long they last. Patents are around 20 years. They're not renewable except for certain pharmaceutical patents. If it's a trademark, it's 15 years, and the renewable term is forever, so you can renew it every 15 years. Copyright, the life of the author plus 50 years. And finally, trade secrets. These are forever as long as they remain secret. So any specific trade secrets on what your secret sauce is, if you don't reveal that in any public manner, and it remains a secret, you're fine. So that's a quick overview on IP. Again, it is not extensive by any means, but if you do have any more specific IP or patent questions, I strongly recommend you reach out to one of the IP or patent lawyers that we have on the IBC Mentor database. We have, I think, two firms and one or two patent agents that can help with any specific IP questions you have.
Jeff, I have a quick
Yep.
question, if possible.
Yep.
Where can we access the mentor database or?
Yeah, so that should be on the IBC self-serve page. Here, I'll quickly pull it up. And does everyone here know the self-service page, what it is, what it does?
Thank you. Okay.
Yeah, I'm going to assume the silence means no, we don't. Please show it to us, Jeff, and tell us what the heck it is. So, you folks should see on the screen here, this is the IBC self-service page. I just gave you the link to access it. Essentially on here, this is your one-stop shop as an IBC member. Everything from accessing mentors, accessing the community to connect with other members, updating your team information, adding team members, accessing all the different perks that are available to you as an IBC member, as a Zone Learning member. And finally, accessing the IBC Wiki and Startup School for any knowledge or questions, templates, those sort of things. So the one I'll focus on, because I've been referring to a lot, is the mentorship. So you can actually go on here, and we have a plethora of mentors that have agreed to give in their time, and mentors and EARs, to talk and answer any questions you have. And going on here, you can see all the different mentors that we have and what they do. And you can browse through each of these cards yourself, or you can filter through and go, okay, I'm looking for a mentor that, where is it? What the heck is it? Job title, yeah, industry. So what industry are you looking for? Okay, let's say it's looking for legal, or where is it? Intellectual property. Here are all the mentors that have identified themselves as intellectual property. So you can go through here, take a look at who they are. If you're interested, say for Tony, if you want to book some time with him because you have a question about patents or IP, just click on this link to schedule a meeting. This will bring you to a page here where essentially you put in the mentor name, you put in your startup name, briefly what the reason is you're trying to meet, and then provide some dates and times that you're free. And then from here, the system will go to your advisor, advisor will approve, and then that mentor will get a notice saying, oh, Adham is looking to book time to speak about patents. Here's the reason, here's the times. Does this work? And if it does, you'll get a notice saying, yes, it does, and then you can schedule it however you want. So if you folks haven't already, I just put the link in the chat, and you can see the instructions here on how to use the EIR portal or Mentor EIR portal. But take advantage of this resource and see what we have. I'd also recommend for you two to go through the different perks that you have as Zone Learning members. A lot of those perks are going to be things like services, programs, and you get special deals or credits and things like that. So if you haven't already, spend like 30 minutes, 45 minutes going through those resources. That'll be super helpful. Which goes to my next one, accessing resources. So legal work can be expensive. Yes, there's going to be some places that they're going to put deals and things, and you get it for a few hundred, or they'll do it for they'll defer payment until later on, or maybe they'll instead of charging you, they may take like 1 or 2% equity. So consider that when you're looking at legal work. And even for the folks that we have listed, some of them are service providers, and at the end of the day, they got to make money. Not to say that they're going to try and scam you or anything nefarious, but understand that they're going to be coming from, okay, how do we, and I'm sorry for picking on you, but you have the first name on here. How do we get Adham as a client? If he's looking to come to us for patents and stuff, what can we do to help him out? But we want to get his business, when he is able to make revenue. And there's numerous resources out there for founders. So again, IBC mentors, I think Ryerson has some sort of legal service or something like that. I believe it's run out of TRSM. I don't recall the specific name, but I think some founders have used that in the past. But also ask yourself, is this right for you? Like, do you need to use any legal resources at the very moment? Look, at the end of the day, it's what do you feel comfortable with? There's some founders who have just found templates, modified it, and went with that. Pros and cons of that. Pros, you're not spending too much money. You can get it done pretty quickly. The cons, if you don't do it right, it could bite you in the butt later. And you may want to have at least a legal expert to quickly just read it over and give you some insights. And shop around. This is for any service, not just legal, including accounting. All these folks are businesses. There's a ton of legal firms, a ton of accounting firms, a ton of service providers for just about anything that you need. Shop around and see what can give you the right deal and what's the right fit. Do they align, with what you're trying to do? Do you like dealing with people? Is the price within your price point? Is it a good deal? So you have that ability. You're not just stuck with even the resources that we say. If you're like, hey, you know what? These firms are cool, but we don't want to deal with, the ones that you have on here or the ones you suggested. I know someone else. That's cool. That's perfectly fine. Figure out what works for you in the situation you're in right now. Questions on anything on the legal-ish side before I move in to the next section? Okay, cool. So accounting basics, accounting. Again, it is one of the critical things that you should be starting and thinking about for your venture. I think most of you right now are at a point where you're like, just doing customer discovery, you don't have any profits. It's just probably a bunch of costs, no revenues, but you should start getting in the habit and thinking about, what does the accounting look like? So it's good to start developing your financial management habits now for your venture. So things like bookkeeping, keeping track of receipts and expenses. This is good to build that now because as things grow, as things start to ramp up, you want to already be in that headspace of tracking. You don't want to just have, the shoebox of 50 receipts, and when it comes time to file your taxes, you're freaking out because you've got to go through each document to figure out which works for what. So you also should understand what can and cannot be deducted. And also, you've got limited resources. Manage them well. Understand what the numbers are. Even for those right now, if you have gotten ESH or some kind of grant, or you have some funding, understand how much of that funding you have, what it's being used for, recording the ins and outs. So you, when you're trying to make strategic decisions, or you and your team are trying to make it, you have an understanding of where your resources are going. These are all great data points, and it's good to keep this stuff just well managed and in order. So bookkeeping, this is probably the first point that everyone sort of does. Again, I recommend you start preparing and maintaining records now. Even if you're not making any money, it's good to have a good record keeping of, what are your costs? What are your revenues? Where is the cash flow? What does that all look like? Get into the habit sooner rather than later. So some examples of different resources. Going to throw them on here. You folks can read quicker than I can talk, but here's a handful of different resources. These are sort of the ones that pop up a lot. You've got your QuickBooks and your FreshBooks for bookkeeping. You've got HubDoc and Receipt Bank for managing and keeping track of your receipts. So those are some examples. If you go on the IBC DMZ perks, you can probably see a lot more where you can get deals on. A lot of these ones also have free versions to use, or trial ones for founders. So, check out what's out there, see what you're comfortable with. But at the end of the day, with any kind of online tool or tool in general, if you don't adopt it and use it, it doesn't matter, how much you paid for it or how cool it looks. Okay. So the next is taxes, and since we're in tax season, this is sort of fitting, but deductibles. As a company, you are able to do some deductibles, and it's any expense incurred with the intent to help you earn more profits, help or do your job, unless specifically prohibited by the Income Tax Act, is an allowable deduction. So you need to understand what is acceptable and what is not. I'm not going to get too much into the details of the whole list of what is not. You can go on the CRA's website. They'll be able to tell you. We also have advisors in accounting and tax that you can book time with using the Mentor portal, although it is tax season, so obviously it may be tricky to get their time right now. So here's a quick example of some deductible expenses. I'm not going to read all of them. Again, you guys can read quicker than I can talk, but here are just some of the different examples that you're able to deduct. One thing, again, I do want to stress is when you are deducting, for example, like meals and entertainment, it's got a 50% is allowed as a deduction. You need to be able to justify that that's true. You can't just go out with a bunch of friends and go, oh, this is meals and entertainment, deduct. Again, the CRA is very, very good at finding out if you're not being forthcoming with your taxes. And quickly, just some filing deadlines. So for personal income tax, that's due April 30th. Sole proprietorship is due June 15th. Corporate income tax is due 6 months after the year end. And your records must be kept for 6 years from the date of filing. So if you have any receipts or any kind of documentation, you do have to store that for the 6 years. Now, the one thing as a business, especially if you're, say, a contractor, is GST, HST. You're able to charge that. It's recommended that you register when taxable sales exceed $30,000. And again, to register this, you literally can just go on the CRA's site. You can register and you'll get a GST, HST number that you can use. My thought, though, also is when you're charging HST, you obviously need to be able to register it. But if your sales are not over 30 grand, you don't need to charge HST, GST. And you need to charge the appropriate HST to your province or territory. So, in Ontario, that rate could be different from that in Quebec or Vancouver or any other one. So, just make sure based on where you are, you're charging the right amount. Tax credits. So, if you're charging HST, you're also able to do ITCs, which are the input tax credits. These are essentially, you can write off part of the HST that you charge, so it reduces the amount of HST you have to pay. Your filing's based on the type of registration of, how you registered your company and set up the HST. And then finally, an overview for everything is understand what are the resources you have access to right now. And going back to the why, ask yourself why. Why do you want to incorporate? Why do you want to get this bookkeeping software, or do you want to even hire a bookkeeping service, or should you be charging HST or all these things? Like, strategically, does this make sense? And take advantage of the mentorship and tools and programmings to assist you. I think everyone here is an IBC member, so you can use the wiki, the mentors, and all the different perks. There's tons of community events too that you can ask questions on. If you haven't already, Startup North, which is a Facebook page, there's a tremendous amount of folks in the entrepreneurship community there where you can post questions you have about accounting, incorporation, all that. You can get some information. My one caveat on this, and this is really with any kind of insight, is whoever's talking to you, you should understand where they're coming from, what are their expertise, what their potential biases are, and does that opinion make sense? Does that assist you? So that is the caveat on that. Now that the world's starting to open up, there's a lot more networking events. You got like startup drinks and different things that are happening throughout the year, conferences. So those are great ways to leverage resources or find out, making connections, seeing what's out there. And obviously LinkedIn, don't be afraid to reach out to people directly on LinkedIn. If there are second or third connections, see if you can get someone to do a warm introduction. If you ever find a potential resource or individual you want to reach out to, and you see, for example, either myself or Harry or someone from the IBZ team is a connection, feel free to reach out to us, and we might be able to help with some sort of warm intro. So details matter for founders, even in the beginning. And second, details matter in the terms of services for the programs, or sorry, for the services that you're using. So understand what is the fine print. Sometimes now they've got these, packages where it's a suite of different legal and accounting resources for founders. And it may be great for you now, but there may be caveats on there where, if you exceed a certain amount of revenue or you exceed whatever the parameters are, you might get charged more. So really do understand what those details are and, what is the opportunity cost. So that's my talk.